Hello, and welcome to Thinking Solo, where we talk about ways to succeed in business and in life. I am your host, Ryan Derousseau. I'm a fee-only financial advisor, and you can find me at thinkingcapfinancial.com. Thank you for joining me today. This is a really interesting episode because we're going to do a private practice checklist. Now, this isn't just for private practice owners, whether you're a therapist, a psychotherapist, a psychologist, a psychiatrist, or another medical professional. It's also a good sort of reminder for anyone out there who's starting a business. What are the things that you need to get in place in order to succeed in your business? And that's really what I want to talk about today. So thanks for joining me. I can't wait to chat, and let's get started. The importance about having the right structure and plan for your business is a good one because it's great if you start treating the business like a business from the get-go. Now, there is a fine line between this because there are plenty of folks out there that I know and that I've talked to and that I've interacted with where they want to plan for the business to start, and then they never actually start. In fact, they're using the planning of the business as a procrastination tool from actually seeing if the business can operate and work. And that is a really dangerous game because you're not going to prepare for everything. And so while it's important to have a plan in place and know what is the first things that you need to do as a business owner, it's also important to remember the most important step is to get started. Because if you cannot get that business launched, then you will never earn a dime from the business. And it's not the business that's failing, it's actually the paralysis that's going on, or paralysis by analysis, I think is how you would say that. And so we want to make sure that we're not doing that. Now, in the meantime, these are some things that you need to have in place as you are beginning to operate. And then I want to go through 5 sort of things that to make sure to do as you're getting started. The first one is to choose the right business structure. When you are operating in private practice mode, this can sometimes come pretty easily because there may be rules in your state that require you to operate a specific way. Therapists, doctors, lawyers, they may have to operate as a PLLC no matter what. Now, you don't have to determine if you're going to be a PLLC or an S Corp or a C Corp right away, but determining whether you are a PLLC or LLC or sole prop is going to be really important. And you need to know what your state's rules are about that. And that speaks to your specific profession. And you want to focus on what others in your space are actually doing, because there's some legal wiggle room there, but also not as much. Right? Because if you're service oriented, there's certain rules that they expect from you. Now, if you're a contractor, there's probably not. But for others who are, in the medical or nearby medical professions, then yeah, you're going to need to operate in a certain way. Same with lawyers, typically. But what this does is makes it ensure that you are an entity beyond just yourself. So that creates a little bit of liability protection if you have a PLLC or an LLC. From a tax standpoint, it does nothing. Like, you are still a sole proprietor in the eyes of the IRS. It's not until you decide to become an S Corp or C Corp where that may change. But until you have a good flow of income and assets, then operating on the smaller scale is totally fine because you're not going to get a lot of benefits from the other tools, and they're going to be really expensive to operate. So choosing like a PLLC or an LLC, depending on your state, and then eventually shifting over to an S Corp is a very common practice. And so I would suggest starting and figuring out if that is the right sort of strategy for you in terms of how you're operating the state. Will a PLLC or an LLC suffice? One tricky sort of aspect of starting a business is how to collect and give out, like, pay for expenses. So collect income and pay for expenses. And often when people are starting out, they may just choose their personal checking account as their business account. And this can get real messy later on when you try and separate things out, because you don't know how the company's been operating, because it's so intermixed with other stuff that's going on in the personal account, especially if you have a partner of some sort also connected to the account. And it also is harder to track over the course of time, because a personal account is not going to have as much bells and whistles as a personal or business account. And so you need to know sort of what's going on over the course of time. And you can't really do that if you don't have bookkeeping tools and set up and the right business account connected to it. And so one thing I would do is begin the infrastructure of your business a little early. As you're seeing your very first client, having a checking account, having a business credit card, having QuickBooks, or a similar sort of bookkeeping tool, so you can see what your year looks like, what your quarter looks like, that sort of thing. This is going to help in many different ways. I mean, it's going to help from knowing how well the business is doing. It's going to help from when you come tax time, like need asset or like information to send to the CPA or EA or whoever's doing your taxes, as well as just understanding what your monthly break-even point is. So like, how much do you need to make in order to ensure that you are covering your needs on the personal side? All of this is going to play a role, and really that needs to be in place before you begin seeing clients, or just right as you're seeing clients. Important sort of layer when you're operating for yourself is going to be taxes. It becomes a really, really big part of the equation as you're operating, because of all the various tax rules that are really connected to the self-employed. And, from like paying Social Security and Medicare tax, i.e. the self-employment tax, to ensuring you're paying enough from an income tax standpoint. And so the sooner that you are planning for taxes is going to be key for you as you move forward. And so creating estimates for self-employment from the get-go, that speaks to having the right bookkeeping and business account structure as well. So you can quickly gather these things, and either you or, an advisor of some sort helps you determine what those self-employment taxes are going to be. Now, maybe in the first year, like your income may not be significant. It's also possible that first year you could make more than you ever made in your profession. Like, both sort of situations can happen. And so being cautious of like how much income is coming in and what that's going to mean for taxes is going to be really important. That first year, you really just need to cover 100 to 110% of your last year tax requirements, and you'll be good. But if you make double to triple in the first year of what you made previously, which is not unheard of in a real service-based business, then you're going to be owing a lot come that April, and you're going to be paying estimated tax for the next year. That's why I call April 15th the most expensive day of the year for the self-employed, and people don't really recognize that, or it's not really talked about, but you're paying April 15th and April 15th estimated taxes all at the same time. It's a huge, huge load. And so the more that you're planning on it now from the get-go, as soon as you start collecting a single dollar, the better off you'll be. The fourth thing to really think about is replacing the benefits that you left behind. Since you are just starting out potentially, then you need to know what are the benefits that you have to have in place in order to operate. If you're a medical professional, you almost certainly need certain protections from the get-go, including long-term disability insurance, potentially liability insurance, malpractice insurance. You need to know what you need to have in place just to operate, on your own. But also you need to understand sort of how you're going to make up for the benefits that you received when you were in-house somewhere or operating under another umbrella. And, this doesn't have to be figured out from day one, the other parts, but you'll quickly want to incorporate them so they're not left stagnant for too long. And, that includes health insurance, life insurance, solo 401k, SEP IRA, something like that for retirement, as well as creating a financial safety net for yourself, because so you have short-term disability protection and things of that nature. These are things that almost come free when some of this stuff comes almost free when you are under an organization as a W-2 employee, like short-term disability. But as a business owner, especially if you have a family, that's going to be requiring these sort of things much faster than, say, someone who's very young and just starting to get started in their career. And so you need to be aware of that and have a plan for that as you get started. The fifth thing is really start to think about, before you even operate, what you need to make and what you need to charge in order to reach the level that you need to make in order to, feel and cover your costs and needs and feel successful in the business. And so you want to make sure that you're calculating your revenue the right way, where you're covering overhead, taxes, retirement savings, your personal income. You need to be covering all of that in order to make sure that this business is a success. And so, hey, if you say, like, I made, $100,000. I never made $100,000 before, and now I've made $100,000. That's a huge success. But you didn't take account for Social Security. You didn't take account for medical care. You didn't take account for health insurance. You didn't take account for retirement savings or income taxes. You're going to walk away with far less than you ever imagined, and you're going to wonder why you're not making any money. And it's partly because you didn't set that income goal high enough, and therefore you didn't set the session fee high enough. And so let's say you're needing to make 200,000, and you have a certain number of sessions that you can do in a year. Dividing that by 200,000 will tell you what the rate should be. And if that rate is not possible for your profession, then something needs to change. Either your goals need to change, your expenses need to change, or your hours need to change. And so something has to give there in order to make that 200,000 target that you're trying to reach for yourself. But it's not just knowing what that per hour rate is, but it's also knowing what all these revenues coming in, what do they need to cover? Because what we want at the end is profits that are going to cover your needs, cover your wants, cover your retirement, cover all of it, health insurance, life insurance, all that other stuff as well. So you are fully protected and growing that business over the long term. These 5 things are just 5 things that come to mind from a financial advising perspective, but there's 1,001 things that you probably have to do just from an operational perspective. So also making sure that you have a list of those things in place is going to be really important to give you sort of a framework for how to move forward and go out on your own. But the more that you're incorporating the financial side within this, the better off you're going to be long term, and the more likely you're going to profit sooner rather than later. And so it's something to think about as you begin your own journey. Today's movie review is an interesting one because it's one, when I first saw it, I didn't think much of it. Maybe I didn't get it. Maybe I was too young. I think it was Roger Ebert who once said that, the movie didn't change, but you did. And maybe I changed. But Miller's Crossing, a Coen Brothers movie from 1990, it stars Gabriel Byrne, tough name for me, Albert Finney, John Turturro, and many others. And I think it's funny because it's a very different tone than a lot of mob movies that I'd seen in the past. Maybe that was the reason that I didn't connect with this one at first. But now that I've had some time and years that followed, this has now become one of my favorite Coen Brothers movies. And I recently rewatched it, and it's just a very unusual look at a mob movie where tons of quirks, and you're looking, like, I was looking at something through fresh eyes because, I didn't have as much hang up about it as when I first watched it, but I'm also sort of know where it's going. So I'm able to actually take it in and enjoy it. And this really telling of sort of the experience that I had, just because it's also what we can do in our business. We can get really stuck in our business and not really look at it with fresh eyes, and it can become a grind. And if that's happening, then we really need to take an opportunity to maybe take a rest, maybe take a vacation, maybe uh, look at the business through another perspective in some way, so we can start to connect and understand how the business is going to move forward, so we can turn that business into something of joy again, instead of something that you're just not getting. And so it was a really good lesson for me, because coming back to Miller's Crossing it's just now, I mean, Coen Brothers is probably maybe my favorite set of directors. And so it's hard for me to say it's my favorite one, because, there's True Grit I love, there's Fargo that I love, there's No Country for Old Men, but Miller's Crossing is right there among them now. And that was definitely not the case many years ago. That's today's show. Thanks for joining us. Again, you can find me at Thinking Solo. I'm on LinkedIn under my name, Ryan Derousseau, and you can also find me on my website, thinkingcapfinancial.com. Be sure to subscribe, and I'll speak to you next time. In the meantime, keep grinding.